Markets generally tend to be forward-looking, and actually if we look at BP's share price, it is now approaching levels or peaks that we last saw in 2011, 2012 and 2014. So on a valuation basis, it is actually looking quite expensive, certainly in the context of where the share price has been over the course of the last few years. 2014, it was only briefly above that £5 level. Now we are heading back towards that, but again, I think there is a concern that it is starting to get a little bit stretched at these sorts of levels. So we need to be careful about how much further upside there is in oil and gas stocks. That needs to be looked through a prism of where crude oil prices are. And again, if we have a look at this Brent crude chart and the WTI chart, we can see that oil prices are pushing against a significant resistance level, not only on Brent crude but WTI as well. Now, what's causing this test? Well, it's not hard to see why. OPEC and non-OPEC members have been continually talking the oil price up over the course of the past few months. Ultimately, they've been talking about a production freeze or a production cut. Vladimir Putin, the president of Russia, has been the latest to weigh in on that subject by suggesting that Russia might be open to just such an agreement. But words for me count for very little. They help in some respects in pushing the price up, but ultimately it's about what oil producers do, and Russia is pumping at record levels. Iran is looking to boost its production back to pre-sanction levels of 4 million barrels a day, which really only leaves as the only remaining swing producer Saudi Arabia as the prospect that it will look at cut its output. Now, talking about cutting output and actually doing it, two totally different things. So ultimately, while the momentum is for a higher oil price, we are pushing it against a significant resistance area on the Brent contract here. 61.8 Fibonacci retracement from the May peaks in 2015 to the lows that we saw in early to mid-January on Brent crude. Comes in around about $53 a barrel, which was pretty much the peaks that we saw earlier this month. And that's before you even factor in the prospect that shale producers could bring back output onto the market as the oil price pushes ever higher, and also the fact that a strong dollar could actually also start to weigh on the oil price. So let's look at the resistance levels on WTI, because they're fairly similar, and again we're pushing against the June peaks that we saw at around about $51.5 a barrel. So again we can see we're once again pushing against a very significant resistance area on WTI. For Brent crude to break out and WTI to break out, I want to see breaks on both those contracts higher, really to open up the levels that we saw at through the middle of 2015.
Will be roughly at today's level, and natural gas must and will increase significantly from the level that we see today, most notably to replace coal in the electricity production. And until 2035, the industry need to replace something like 4 times the current Saudi Arabia production in oil, and more than 10 times the current annual production of gas, of Statoil or Norway. That is. And I think if you look at the challenges that the industry have today in terms of bringing forward new supply at a cost-efficient way, I think most of you will agree that this is a formidable challenge, not only for business, but I think also for the society. The industry must remain competitive in the race for capital and talent to be able to deliver on our mission to bring light, heating and transportation to the world, and I think to be a reliable source for economic growth to the world, including the US. Society, i.e. the politicians in this case, must incentivize the right decisions and to create a level playing field to addressing both the needs for energy, but also for less CO2 in the energy production. To succeed in this environment, Statoil has put in place a very focused strategy for high-value growth, for increasing efficiency, both in terms of cost and capital, and also to improve capital discipline to be able to return adequate to shareholders as we move forward. And our response have been primarily in 4 areas. The first one is to revitalize Norwegian continental shelf. And most of you that follow the oil and gas industry closely, you know that a few years back, most thought that the oil and gas industry in Norway will just decline and rapidly sort of go into non-existence. That has not happened. And the last few years, we have made major discoveries, even in the most mature areas, that has prolonged the life of Norwegian continental shelf in many decades. The second part of our strategy was to re-energize our exploration efforts, which we did 10 years back. And the last few years, we have been, I think, the best oil and gas company in the world in terms of finding new conventional oil and gas resources. We have also modernized our gas portfolio. We have moved away from the oil-linked gas contracts that the European gas infrastructure was built on back 20 years into gas-to-gas and market-based contracts. And that has been, I think, very important. And we have also built or are in the process of building a quite solid gas business, not only in Europe, but also in the US, where we have a big position particularly in Marcellus. And that is really the fourth topic of our strategy, to continue to build our unconventional business, because we simply believe that will be an important part of long-term energy supply. That really brings me to the topic about the importance of North America for Statoil. I think we have shown some commitment. We have invested billions of dollars over the last few years in the US particularly. We have more than 2,000 people now employed here, and I don't know whether that was a good thing or a bad thing, but Statoil was named by the Progressive Policy Institute as the 3rd most important overseas investor in the US energy sector over the 2 previous years. And North America already provides roughly 15% of the total production of Statoil globally. We actually started back in 1987, but that was more marketing and trading activities. We took our first real position offshore Gulf of Mexico in 2004, and we are now represented onshore in Gulf of Mexico, in Canada, predominantly offshore, but also with a small oil sands position. As we have proven, I think, in our 40 years with Norwegian operations, safety always comes first and is essential to our business and our commitments and to our employees and the communities in which we operate. And one of the most important things we have learned throughout these 4 decades is that complacency and arrogancy is really the most important enemy you have in terms of moving forward in improving day by day in the safety field. And I think this is a general lesson for companies, but it's even more important in the field of safety, because every day is a new day and you have risks that you need to handle. In Gulf of Mexico, we have a number of high-quality fields being developed by our partners, 7. That is, we have also now started a quite comprehensive drilling program, Statoil operated, and we were setting the new Martin well a few weeks back. And throughout this decade, at the back end of this decade, Gulf of Mexico will be one of the most important offshore regions in Statoil. Offshore Canada, we have also built over the last few years quite significant exploration positions, and we got a large encouragement last year, where we actually, outside Newfoundland, made the biggest offshore oil discovery last year. And a few weeks back, we decided to move a rig from Norway now to accelerate the drilling program outside Canada over the next few years. That brings me to onshore the US. where we are present in Marcellus. We entered that in that area in 2008 in a joint venture with Chesapeake. Subsequently, we entered Eagle Ford with Talisman in 2010, and in 2011 we acquired Brigham Exploration to move into a quite significant position in Bakken in North Dakota. And I think the Bakken field is named after a former Norwegian farmer called Otto Bakken. So I think the circles are now closed. And of course, we were new to onshore operations and unconventional operations, but we feel that we have the capability to be a competitive player. That has a lot to do with operating practices, I think, our values, and the way we use technology, and with a particular emphasis on getting as much as possible out of the fields where we operate. That brings me to my third and final theme of the day, and the way we work and how I think our industry must face the new challenges of the future. The challenge of climate change is, of course, global. But globally, the big problem of today is that it's too much CO2 and actually too little politics. But while waiting for effective global measures, local alternatives have to be implemented. And since I'm in Washington, let me use the US onshore as an illustrative examples. Operatorships in the 3 main US onshore plays give us the opportunity to apply our values in the field. And at Statoil, we say that how we do things is as important as what we do. And we recognize that there have been concerns about air, water, climate impacts of shale gas and tight oil development. And we are committed to work with peers, with government and other stakeholders to develop robust and appropriate standards and best practices throughout our operations. In our view, a number of states have put in place good and well thought through regulations for unconventional resource development. And we believe that regulations should reflect and cater to local conditions because population density and issues related to water availability will tend to differ, for instance, between Texas and Pennsylvania. And having said that, we can also see that there are areas in which some common best practices can be applied. We truly believe in the industry working with governments, with civil society, and with the scientific community to ensure that these resources are developed in a responsible and sustainable way. Let's take our operations in North Dakota as an example, how we're trying to implement these principles into practice. In the Bakken, a lack of infrastructure for evacuating associated gas means we have to find innovative ways to minimize flaring and methane emissions. We have invested significantly over the last few years in building our own pipelines, 700 miles of pipeline in North Dakota to support our operations, including natural gas gathering system, as well as pipes to carry water and produced oil. We work closely with infrastructure providers and processors to assist with future planning. We prioritize the use of leading wellhead technology and techniques to limit the impact of our operations. And our rig fleet is now entirely converted to biofuel application. And these systems actually replace up to 60% of the diesel with natural gas. As far as we can, we want to use gas rather than diesel to heat our fracturing fluids and our equipment. And we continue to innovate, which is important. We are evaluating several smaller scale technological pilots, like our partnerships with GE, or the use of compressed natural gas through the CNG in a box application, as well as local microgeneration of electricity to further increase efficiency and reduce waste and emissions too. We even feel our joint efforts have been recognized locally, perhaps also from time to time in DC. We're proud of the progress that we have made, but we recognize also that there are still lots of work to be done. Commercial scale shale gas and tight oil is still in its infancy, and there are many challenges from a business perspective, a social perspective, and also from an environmental perspective. And successfully tackling these challenges will require more than the efforts of a single company, even an entire industry. Some progress has already been made. The state of North Dakota, for example, has an effective regulatory regime